Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. This is our forex technical analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. Before we pull up our video, we always want to start off our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our forex technical analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. In each video, we look at the prior session's price action to come up with key support and resistance price levels. We'll review the gold chart to come up with leading sentiment. We'll try to create a low volatility and inside bar watch list, and we have an education spotlight at the end. Please send your feedback and comments to contact@dmbfx.com, and let's head to the charts. As we look at the week that was in Forex, we'll see that the U.S. employment situation is coming into the forefront. This week we saw the FOMC say that they'll keep their interest rates low through 2014 at the two-day FOMC meeting. And Bernanke at his press conference afterwards continued to say that the FOMC is willing to do whatever it takes, which keeps the lure, the potential of QE3 on the table, but the data is not really supporting it right now. We also saw GDP coming at 2.2% versus 2.5%. So for the first quarter, so it's a little bit lower than expected. So, Wednesday we have ADP, which sometimes align with Friday's non-farm payroll numbers. So that's certainly something to watch this week. We also see that the Bank of Japan underwhelming with its expected asset protection program. On Monday, we expect to see that the RBA will cut interest rates by 25 basis points. And then we have what was going on in the Eurozone. And really, China also. So the manufacturing data showed tightening in China and Germany and a couple other European countries. Yes, I know China's not in Europe. We also saw Netherlands refuse to sign off on the latest Eurozone budget. It was actually a good 60 Minutes episode on the Eurozone and their debt crisis about 2 weeks ago, and it was talking about how it was those countries that saved their money, Germany, Netherlands, these smaller countries are now starting to resist paying for Greece and Spain and Italy their debt problems as they spent money a little bit crazy. We had the political shakeup in France. One of the opponents beat Sarkozy in the initial runoff, so that was interesting. We have an upcoming G20 meeting, and don't forget the S&P downgraded Spain's debt again to triple B plus. So how will the Eurozone be able to come together and solve yet another country's debt problem, which really gets to the point of, is the UK economy really that weak? Now remember, it slipped back into recession during the first quarter, but when you look at the pigs, Portugal, Italy, Greece, Spain, is it really that bad? We're starting off with our market sentiment leaders. Here we are looking at the dollar. You can really see 2012 has definitely been a consolidation of the price action. You can see right here we have a swing low at 78.54. Down here we have our swing low down at 78.20. It does look like we're breaking out of that 79 range, coming down pretty nicely. So we'll see if we get a little bounce here off the 200 moving average and we can hold this range. Otherwise, we're looking down. So sideways, maybe even sideways to down, because we can also see some lower highs here. The dollar looks sideways to down. What does that mean for gold? Usually we have an inverse relationship. But we see some consolidation and a little move up. We need to get above 1670, and then we need to get above the 200 moving average to really start to see some action here. We are above the value area high here. So I say sideways. I'm not going to say sideways to up yet. Unfortunately, crude oil sideways, and like gold, it's trying to make a little move higher. And we know what that means for our pocketbooks. 105 was where all these wicks to the downside, 105. Now we're seeing these wicks on the top at 105. So it'll be interesting to see if we can break it and move higher there on crude oil. We are starting off by looking at the euro dollar, and the one thing we see is that we're starting to break out of this range of 1.32 and 1.305. So once again, and this is what we've been talking about, we've talked about this buying value here, and once again it worked. Now what's interesting is that again, there was a little rationale to sell here because we've been at range so much. So what's going to be interesting is as we come up here and air kiss the 200 moving average, will this be the hard resistance? We do have a couple lower highs here, and if we zoom out to our monthly, we can kind of see where we're headed to 1.34 as our next area of interest. But again, this 200 moving average is definitely something that we want to watch and see what happens here. We come over to our 1 hour time frames, we can see that we are in a sell zone above our short-term and long-term moving average. Our indicators are getting up a little bit to over bought, but you see we've already got a little pullback, which is this 1 hour candle here. So overall, we're going to watch and see. The main thing is, will this 1.321 hold up as support as we move up toward the 200 moving average, or will we come back into this zone? We also see some strength here in the pound dollar. Look at that. Like the euro dollar, we've broken out of the range. However, this time you can see we're making higher highs, whereas we still have some lower highs potential on the euro dollar. So definitely a little bit more strength here on the pound dollar. And we'll go out to the monthly here, and you can see where we are is at the 50 moving average. We are in a sell zone. We are above our long-term moving averages, and similarly, you're seeing us starting to get into that overbought range, which is certainly fine. And we see we're at resistance on the monthly chart of the 50 moving average, so we'll have to see where we go from here. Finally, we'll look at the dollar franc. And there's that little weakness. We were in a big range here on the dollar franc, and now not only have we broken between the 50 and the 200, but now we're breaking out at this 0.9038 support price level. And so we'll have to wonder if we'll go back and retest the March lows or even the February lows. Right now, we can still say we have higher lows, but we need to hold this area. Otherwise, we'll start to see a downtrend take effect. And a good way to look at that is to see we do have lower highs here, but we have higher lows here. So we see sort of a wedge happening in the market wanting to break out of this one way or the other. We are in a buy zone on a 1 hour time frame below our long-term moving averages, and our indicators are showing the same. Let's take a look at our low volatility and inside bar watch list. We'll take a look by saying right now we don't have any candidates. Our low volatility watch list is our 1 hour time frame using Bollinger Bands, see if we have anything consolidating, waiting for a breakout. Our inside bar watch list is where we watch today's range and compare it to the days previously, but again, we don't have any candidates at the current time. So, we've moved on to a discussion about high probability trading. So what is it? And basically, it's about low-risk trading. We've identified our stops, we've identified our targets, and more importantly, we're using systems that we've back-tested so that we can have a positive expectancy. What is a positive expectancy? That we know over a period of time, over a series of trades, we're going to have more profitable trades than losing trades. Or more importantly, we will be profitable versus losing. And we just have to let the system work out. We only know that by backtesting. And the other thing we know by backtesting is that the system that we're using matches who we are as a trader. Again, one of the biggest mistakes traders make is that they trade somebody else's system. There are hundreds and thousands of trading strategies out there, all good, all work. What you have to do is find the one that works for you. Do you have enough money for the system? Do you have enough mental stability for the system? Can you handle the risk? All those things matter. So you predetermine the money managements, the stops, the targets. You're trading in the direction of the trend so that you're allowing this to be lowest trade and you're not the salmon fighting the currents of a stream uphill. Again, always we like you to comment and subscribe. Let us know what you like, what you want to see so that we can continue to provide you value. And we have our normal resources. Our coaching will help you one-on-one develop that trader's mindset so that you will have that mental stability to implement the correct strategy for you. Or you can put our expertise to work. We use the leading forex brokers, full transparency, and we'll create an individualized trading plan just for your fund. And finally, if you're looking for signals, we can help you with that. Again, remember the key is finding a system, finding signals that matches your trading style and what risk you can handle versus anybody's, because there's not like getting a signal and then having to hold through what somebody else feels comfortable wading through as far as heat that you're not. So it doesn't make a difference how you trade. It makes a difference who you are as a trader and whether or not you can implement those strategies. Thanks, guys, and I'll see you next time.